How's it going, guys? Welcome back to another video. Thanks for tuning into Stock Essentials. My name is Alex. We're going to be going over our $75,000 Robinhood portfolio. I am up about 7% in the past month. But our main goal with this portfolio, of course, I have many different portfolios. I like to spread my money, kind of diversify brokerages. I have accounts with Fidelity, Bank of America, um, Vanguard, as well as Webull. And of course, Robinhood is going to be a large portion of my money. So I have about $190,000 invested in the market. But of course, it's moving in and out with this Robinhood portfolio. I like to do active trading, but my main strategy is actually option selling. So I aim for about 1 to 2% every single week, and I use scanners such as Thinkorswim scanners to find the best stocks to sell cash cleared puts on, as well as I utilize other tools such as barchart.com's highest implied volatility stocks to sell puts on. Because remember, the higher the implied volatility, the more premium you're going to be collecting when you're selling cash secured puts. So we're going to be in this video, we're going to be going over our Robinhood portfolio. We have a lot of options contracts open right now, and my main strategy with this portfolio is to sell covered calls as well as cash secured puts, basically wheeling lots of stocks. So in my Discord, which is going to be released pretty soon, we're going to basically disclose every single trade I am doing in the market, mainly on the cash secured put side. Not so much the covered call side, because you do have to own 100 shares of those stocks in order to sell a cash secured put. To sell a covered call, and a lot of people just don't want to own those shares outright. So we're going to be selling cash secured puts, and I have a trading log here, and this is the trading log for 2021 right here. We did have a lot of great winners. We did a risky lottery ticket play on FBRX, and that stock the next day it tanked 82%. So we lost a few $100s on that, but we learned a valuable lesson. Remember, every single loss you have to take as a learning lesson, and we're not really going to be playing the biotech, healthcare stocks, pharmaceuticals. Those stocks are just too risky, too binary. Any of these events is just going to either make or break the stock. So we're going to be avoiding that. But overall, all the stocks that we've been choosing have been making consistent income, averaging about 1% per week, which is a pretty good return considering that it will be about 52% annual return, which is amazing. And if you're reinvesting, it's going to be even higher than that. I anticipate it'll be probably around 70 to 80%, because your portfolio size is going to be growing, and we can make even more income with that money. But we do have, for 2021, this was when we had a really small portfolio with $10,000, and we grew it to $12,000 in just 6 months. So really good profit right here. We did have a really high win rate, and I didn't actually document every single trade. This is from August or July 2020 all the way up to actually February 2021. And then we kind of got lazy and kind of didn't document the rest. But it's been pretty consistent, and that's how I've been making most of my money in the market. So that's what we're going to be doing right there. But we have a lot of positions open right now. And if we check out our trade log, we can see that we're currently holding a lot of these positions. And the best way to make consistent income, this is actually safer than buying and holding stocks, selling cash secured puts. Because basically what's happening is the contract expires worthless and you make the premium in full. Because remember, as option sellers, we want the premium to decay and go to zero. That's where we're going to be making our max profit. Or if the stock goes under our strike price by expiration, we're basically getting paid to buy the dip. Because if you're holding your contract at expiration and you're not buying to close, that means you're going to be collecting the premium in full no matter what. And there's two scenarios. The stock price goes stays above the strike price, which means the contract expires worthless on a cash secured put, and that's the optimal situation. But of course, sometimes the stock price does end up dipping below your strike price, and you have to buy 100 shares at your strike price, but you are collecting that premium that you collected when you opened the contract. So it is going to lower your cost basis a bit, and that's kind of a nice way to buy the dip. In my opinion, this selling cash secured puts, we'll go here in as an example in AAL. I sold this cash secured put, and then we opened it for the 18.5 strike. We collected $22 of premium in a week. Expires today, or September 17th, and we're up most of the profit right here. So two scenarios: you're either collecting the premium in full, making a nice 1% per week, or you're ending up buying the dip. So it's a lot safer than just outright buying shares of the stock, and it's my favorite strategy. Warren Buffett even does it in his own portfolio, but the downside is you do need a lot of collateral. You need thousands of dollars to sell cash secured puts, because you have to put down collateral equal to the strike price multiplied by 100. So it's going to be pretty expensive if you're doing it on higher price stocks such as Apple. Here I sold a cash secured put at the 144 strike, and I had to put down $14,000 of collateral. But you do make a lot more premium for selling higher price stocks, because it's just a more expensive stock. So that's about it for this video. Just kind of disclosing my portfolio and how I'm able to make 1 to 2% per week. We do like to sell cash secured puts at some really safe strike prices in order to just be safe and have an 80 to 90% win rate. But as we can see in our trading log, it's been pretty successful. Most of the trades have been winners, and sometimes we do close out the position early just in case the stock price does dip a little bit, and we don't really want to get assigned shares at expiration if the contract expires in the money. So that's about it for this video. If it helped in any way, please leave a like, comment down below what your thoughts are on this portfolio and this strategy, and of course subscribe if you're new to the channel. It helps out a lot. Thanks for watching.